Hello, welcome to Audit and Assurance class. And this is going to be a 10 module course which is expected to run on 10 topics. And with this, we'll be able to look at some important concepts of auditing and assurance. And today, as an introduction, we will briefly look into auditing and assurance service as we look at introduction to auditing and assurance service, introduction to auditing and assurance services. And in doing that, the module will help us to be able to define auditing and its core nature. We will also look at the understanding of the objective and types of audit. We will look at it. We will explore the auditor's role and the regulatory framework, and we will analyze the audit expectation gap. What is auditing? It is a systematic and objective process. It is a systematic and objective process. So if we will actually define auditing, we have to look at it as a systematic and objective process of objectively obtaining and evaluating evidence regarding assertions to be able to ascertain degree of correspondence and communicating the results. And the key elements from these definitions that we have looked at, which we have to look at, is systematic, objective, evidence-based, assertion-based, criteria referenced, and communicative. Looking at it from the systematic aspect, it actually follows established standard and methodologies. Also, auditing has a key element of objective, that is, it requires independence and impartiality. Also, it's evidence-based, which is that it relies on sufficient, appropriate, and audit evidences. And also, on the assertion-based, it evaluates management's claim as per the existence, completeness, accuracy, and as per the criteria reference, it's judged against framework like IFRS and GAAP. And for the communicative, it results in a formal audit report to users, a formal audit report to the users. We have the primary and subsidiary objective of auditing. And when we talk about the primary objective, it is one that it is to enhance the degree of confidence of intended users in the financial statement by expressing an independent opinion. You see, the word confidence is there, and we have intended users, we have financial statement, and we have that it's express an independent opinion. And if the independence is not there, then it cannot bring about confidence for the intended users. And so it is very, very important. And under the subsidiary objective, the first one is that auditing actually enhance confidence and credibility. It enhances confidence and credibility. It also helps to be able to detect or prevent material misstatement, that is the addressing of fraud and errors within reasonable assurance limit. Also, it helps to be able to verify financial information, that is ensuring accuracy, completeness, reflecting economic reality. And also, it helps to be able to assess internal control in terms of evaluation of designs and implementation. And lastly, it controls or promotes compliance to serve as a check adherence to relevant law and regulations impacting financials. We have types of audit and assurance engagements. And when we talk about this, the first one we'll be looking at is the financial statement audit. And this actually focuses on the fair presentation per reporting framework as it pertains to the IFRS, the National Financial Reporting Standard, and GAAP, which is the generally accepted accounting principle, and the level of assurance under this is reasonable, that is high. And also we have the operational audit, which is also known as the performance audit, and the key focus is on efficiency, effectiveness, and economies of operation. And the assurance level of assurance is varies, and it deals with findings and recommendations. And we also have the compliance audit, and this deals with or focuses on adherence to law, regulations, contracts, or internal policies. And the level of assurance also varies. We have the internal audit, which deals with risk management, control, and governance processes, which actually is in broad scope. And the level of assurance is assurance and consulting. We also have review engagements, and the key focus is interim or smaller entity financial statement, and the level of assurance is limited with this, which is also negative assurance. And lastly, we have the agreed upon procedure, which with a focus on specific procedures on particular subject matters like diligence. And the level of assurance is no assurance, that is factual findings solely are being made. We have the historical evolution of audit profession, and when we talk about the historical evolution of audit profession, we take it from the ancient roots, and under this we talk about verifications in Egypt, Roman, and the medieval time. We also have the era of industrial revolution, which is the 19th century, which is characterized by separation of ownership and control. And at this time, we have Company Act 1844, UK, mandating auditing or audits. We also have the professionalization under the late 19th and early 20th century, and this deals with formation of accounting bodies like the ICAEW. We also have the regulatory response, which is the 20th century, and this deals with the likes of the 1929 crash, the US Security Act 1933 and 1934, the early 2000 scandals. These include the Enroll and the WorldCom, and we have the Sarbanes-Oxley Act also, which is under the 20th century, the regulatory response. And we have the 21st century, which is characterized by technological transformation, data analytics, artificial intelligence. It's also characterized by expanded ESG, assurance, and global standards convergence. Let's look at the key roles of auditor, key roles and responsibilities of auditor. The first one is for the auditor to be able to express independent opinion, and this is the core deliverable based on evidence. And when we talk about independent opinion, you must be able to, like, it must not be the decision that will be taken, the opinion that will be taken must not be interfered with. He must be able to take decisions by himself based on the evidences that are being gathered. And with that, he must be able to express it, the independent opinion. Also, he has a role and responsibility of applying professional skepticism, like asking of questions and being having an alert mindset. And also he must maintain independence. It's not only for him to express independent opinion, he must also maintain independence in facts and also in appearance, and to be able to avoid any form of conflict. Also, he has a role and responsibility to play in communicating with governance, that is, report significant findings about maybe control weakness and the likes to the leaders or the users of the financial information. And also, he has the role of upholding competence and due care through education and the CPD. And lastly, we have he must be able to observe confidentiality. That is, he must be able to safeguard the information of clients from any third party. He must be able to safeguard the information. Looking at the Audit and Assurance Regulatory Framework, it's actually a multi-layered system which ensure quality and protect the public interest. And these include the international standards like the IAASB, which issues IAS, which is a global standard. We also have the national legislation like Complaint Law, Professional Accountancy Act, and specific audit regulations. We also have the public oversight bodies, which include the independent regulators who inspect quality and also enforce compliance. We also have the professional bodies who are vested with a responsibility of setting ethics, providing education and handling of discipline. And the last is the firm level control, quality control. For this, the system for leadership, ethics, engagement, performance, and monitoring. We need to look at the audit expectation gap, and when we talk about the audit expectation gap, this is actually the difference between what users believe auditors do and what auditors are professionally required to do. What the auditors do and what auditors are professionally required to do. And we can divide this into three components. The first one is reasonableness gap. And for this, we talk about unrealistic public expectation versus audit inherent limitation. An example of this is for auditor to detect all frauds. And another is a performance gap where auditors failing to comply with standards, and this results in quality deficiency and lack of skepticism. And last one is communication gap, which is ineffective communication of audit scope, findings, and limitations to users. And a major challenge to stakeholders' confidence. It's actually a major challenge to stakeholders' confidence and professional credibility. A way to bridge these gaps, we have strategies that must be used, and it puts a multifaceted approach. And the first is education, that is enhancing public or users' understanding of audit objective and inherent limitations. Another is an enhanced reporting, whereby there is an expanded audit report to improve transparency. Another is the quality enhancement, which deals with robust firm quality management system and effective independent regulatory oversight. And the last one is methodology evolution, which deals with leveraging technology like data analytics to be able to improve effectiveness and address emerging risk. In conclusion, auditing is a systematic evidence-based assurance service vital for market confidence, and the profession has evolved historically in response to economic and regulatory changes. Auditors operate within a complex regulatory framework and hold significant professional responsibility. Also, we've seen that the audit expectation gap remains a critical issue, requiring ongoing effort from the profession, regulators, and education. And this foundation is really essential for delving into detailed audit methodology, ethics, risk assessment, and reporting in subsequent module. Thank you for listening.